Palantir Technologies has been around for over 20 years, and during that time, the company has gone from being a little-known software developer that mainly served government agencies to becoming one of the most talked-about names in technology and artificial intelligence today. The company built a powerful platform that originally catered almost exclusively to the United States government, but as the years went on, it began to expand into new areas and introduce innovative tools that caught the attention of commercial clients as well. What really transformed Palantir from being a background player to a company in the spotlight was its move into artificial intelligence. 2 years ago, the company launched the Artificial Intelligence Platform, which opened the door for government clients and private businesses alike to take advantage of Palantir's technology. The response from customers was immediate and strong. Both sides, meaning the public sector and private sector, wanted to gain access to the software because of its ability to take enormous amounts of information, analyze it, and provide actionable insights. This shift changed Palantir's growth trajectory dramatically. The company's earnings have surged, and the stock price has mirrored that success. Over just 3 years, Palantir's stock has soared by a stunning 1,900%, which is the kind of return that very few companies ever see. Because of this sharp climb, investors now find themselves asking a very important question. Is it still a good idea to invest in Palantir now, or has the biggest opportunity already passed? To answer this, it helps to look at both sides of the argument. On one hand, there are two very strong reasons to consider buying shares in Palantir. On the other hand, there is also one notable reason that may convince someone to sell or at least wait before buying. When Palantir was first getting started, its reputation was almost completely tied to government contracts. The commercial side of the business was not particularly strong, and for many years it contributed very little to growth. This gave investors the impression that Palantir was going to remain a government-focused company. However, that narrative has shifted in recent years. The commercial business is now a major driver of growth, and it has been expanding significantly with each passing quarter. The artificial intelligence platform has been the main reason behind this change. It gives commercial clients the ability to bring together their scattered data, analyze it efficiently, and then apply that analysis to make smarter decisions, improve efficiency, and uncover valuable insights. Palantir explained during its latest earnings call that the artificial intelligence platform has not only been expanding existing contracts with commercial clients in the United States, but has also been bringing in new contracts at a rapid pace. The total value of commercial contracts in the United States has risen by 222%, reaching an all-time high of $843 million. To put that into perspective, Palantir had only 14 commercial customers in the United States just a few years ago. That number has now ballooned to 485 customers. This is a massive increase in a very short amount of time. Even with this tremendous growth, there is still a lot of room for expansion in the years ahead. The demand for artificial intelligence is only just beginning, and many experts believe that the global artificial intelligence market could grow into a trillion-dollar industry by the end of this decade. That means Palantir's commercial segment has the potential to continue driving higher revenue for a very long time. Of course, it is not just commercial growth that is worth noting. Palantir's government contracts are still growing at double-digit rates, which means the company is firing on all cylinders. While growth itself is impressive, what makes Palantir stand out is its ability to maintain profitability while also expanding so quickly. This balance is often measured in the software industry through something called the Rule of 40. The Rule of 40 is calculated by adding together a company's revenue growth rate and its profit margin. If that number is 40% or higher, the company is seen as balancing both profit and growth effectively. Palantir has been well above this mark for several quarters now. In its most recent quarter, Palantir achieved a Rule of 40 score of 94%, which was an improvement compared to the previous quarter's score of 83%. This performance is highly unusual because most software companies do not reach this benchmark. In fact, research indicates that less than 1/3 of software companies ever reach the Rule of 40, and even fewer manage to stay above it for an extended period. Palantir's ability to consistently maintain this high standard shows that it is not only growing rapidly, but also running its business efficiently. However, with all of this success comes a downside, and that is valuation. Palantir's stock has become very expensive as more investors have jumped on board. The stock now trades at 241 times forward earnings. This is extremely high, even when compared to other fast-growing technology companies. For some investors, this raises the concern that Palantir's stock may already be priced too high. If that is the case, the possibility of large future gains could be reduced because the stock has already run up so much. This is why some people argue that it may be smart to sell now and lock in profits. The question then becomes whether this valuation problem truly matters. On the surface, Palantir does look very expensive, but it is important to remember that the price-to-earnings ratio is based on earnings expectations for the upcoming year only. It does not account for what earnings might look like 5 years or 10 years from now. If Palantir continues to grow its commercial business and maintain its strong government revenue growth, then future earnings could be much higher than current estimates. In that case, investors who buy now and hold for the long term could still see very strong gains. So the answer depends largely on your investing style. If you are looking for a short-term trade, hoping to buy and sell within a few weeks or months, then Palantir may not be the right choice because the stock could be volatile, and the high valuation might limit quick returns. On the other hand, if you are a long-term investor who plans to hold the stock for at least 5 years, then the current valuation may not matter as much. The company's growth potential in artificial intelligence, combined with its proven ability to balance profit and expansion, could still provide substantial returns over time. When you consider all of this together, the case for buying Palantir becomes very compelling. The company has proven it can grow both its government and commercial businesses. It has shown that it can maintain profitability while scaling up at an impressive pace. The artificial intelligence market itself is still in the early stages, which means there is a massive runway ahead for continued growth. Yes, the valuation is high right now, and that is the one clear risk. But if you are willing to be patient and hold the stock for the long haul, then Palantir could still be an excellent addition to a growth-focused portfolio. The two strong reasons to buy, which are its commercial expansion and its ability to balance profitability with growth, outweigh the one concern of its high valuation for investors with a long-term perspective. Essentially, Palantir Technologies has transformed from a government-focused software company into a fast-growing artificial intelligence leader thanks to the launch of its artificial intelligence platform 2 years ago, which has attracted both government and commercial clients. The company's United States commercial customer base has grown from only 14 a few years ago to 485 today, with commercial contract value climbing 222% to a record $843 million. At the same time, government revenue continues to grow at double-digit rates, and Palantir has achieved remarkable profitability, reaching a Rule of 40 score of 94%. However, its stock now trades at 241 times forward earnings, making it expensive and raising concerns for short-term investors. Even so, for those willing to hold long-term, Palantir's strong growth in artificial intelligence and balanced financial performance make it an attractive choice for a growth portfolio. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.